Here again. This is, in case you are not aware of this channel or you're just joining us for the first time, this is Ergon Trader Stock, and this is volume, I think this is volume 6 if I'm not wrong. This is volume 6. Last week we were here and then we diced and analyzed some charts, which was pretty much fun. It was interesting. I think the video was about 1 hour or so. I apologize for the lengthy videos. I apologize. Alright. We analyzed some pairs last week, and what we analyzed are working in our favor. So I'm going to come up here as well and just explain, give you an update on what is happening, and as well introduce to all of us new pairs, new instruments that are lining up pretty nicely, and I want every one of us to take advantage of them. So I don't know who said this, like a man said, don't sleep on a bicycle. I don't want us to sleep on a bicycle. Let us take advantage of these peers that I will be sharing with us, and let us make money together. Once again, this is Ergon Trader Stock. If you haven't subscribed for this channel, please subscribe. It is for your own good, and it is for my own good as well, because if you subscribe, the channel will grow, and then it is going to reach a lot of people. This is an educative content about Forex. So it's going to teach people how to trade, and then it's going to bring enlightenment to a lot of people. Okay. Apologies for talking slowly like this. Just bear with me. Alright, so that wasting our time. I think this is, the time right now is 9:21 a.m. Saturday in Nigeria. The weather is cold. Everybody is happy. Okay. Alright, we're going to start off with Euro USD. We analyzed Euro USD few weeks back, if I'm not mistaken, about a month ago now or so. We made a significant amount of money on a trade call that we made here, and then we analyzed this same pair as well last week, and then we explained to us what is going to happen, what we should expect, and what we should be waiting for. Let me enlarge my screen. So I won't be talking much on the euro dollar pair. I won't say much on the euro dollar pair. You know for a fact that the euro dollar pair is a bullish trend, is a bullish pair. And then last week, if you want to know what I said concerning the euro dollar pair, because I have other pairs I want to analyze as well, so I don't want to waste much time on the euro dollar pair, so that we can move to new pairs that are forming nicely. So if you check the previous volume on Ergon Trader Stock, that is volume 5. In volume 5, we explained to us expressly what the euro dollar is going to do. So I'm just here to update us and not to talk much about it. So without wasting our time, I said earlier, we know for a fact that the euro dollar pair is a bullish trend, is a bullish market. And then last week we said that this is a zone that we know for a fact that the euro dollar pair is going to react off of it. Actually, the first trade call we made on euro dollar pair was around this point, which was 1.1576 all the way to 1.1749. We all made a significant amount of money on this pair, And then we said last week that when this peg gets to this point that it is going to pull back that we are expecting a pullback from this zone down to this green line right about here. And for a week we saw a bearish engulfing candlestick happened nicely. So that means that what we said and what we are expecting is about to happen. So throughout last week we begin to see bearish momentum, a pullback into this trend line support that we drew, that we plotted or drew. So we're expecting the euro dollar pair to roll over to this point and then push back up to the upside. Now I'm just going to say something on this euro dollar pair to make it make sense to all of us. Now you would see as we can all see, we would see a trend line support that is plotted nicely on this point. Now we are expecting the euro dollar pair to roll over to the downside. Okay, a man I respect so much always say something. He said that we should be responsive to the market and not predict the market. Now it would make so much sense for the euro dollar pair to roll over to the downside, and the reason is because it is going to be, it has to tell a story to all of us, and the story that would make sense to make this pair to buy to the upside is for it to roll over to this downside and give to us a double bottom at this green line at 1.14526. So that would be a good story. When euro dollar rolled over to the downside to this point, it's going to give us a double bottom, and then from there it's going to go to the upside. Actually, there is something that I'm seeing, but I wouldn't really consider it to be a factor, and the reason is because it shouldn't be a factor, because for the euro dollar to tell us a good story, remember, we are not trying to predict the market here. We are not predicting the market. We are responsive, like we are responding to what you are saying. And if you have been following me for a while, you realize that there are 4 tools that I use while trading. Number 1, I'm going to be sharing that now. Actually, that is a secret, but because I love you guys, I'll be sharing it. Number 1, I use the principle of price action and the principle of chart patterns. That's the first thing I look at. That is, I allow price, I allow charts, I allow candlesticks to speak to me. I derive informations by looking at the candlesticks. Number 2, I plot my support and resistance as major areas of rejections, as we have all seen. Okay, now number 3, I use trend line as a tool to identify the current flow of the river. Then number 4, I use Fibonacci. So these are the 4 technical tools that I used while analyzing the market. Alright, and based on the first one, which is the principle of price action and the principle of chart pattern, that is the reason why I was saying that for the euro dollar to give us a better story, it has to come down to this green line for it to pull, for the story to be complete, for it to pull to the upside. Okay, now I was saying something earlier. I said I was seeing something on the euro dollar there, and I was also seeing it on a group that I was, and everybody is saying that actually they are not wrong. Okay, because I've come to understand that trading forex is dynamic. It is very, very dynamic. Like, it is a wild river. Nobody can swim into the end. So we just need to everybody needs to have a lifeguard coat, because if you don't have it, somebody can be drowned by the river of forex. All right, I was seeing something on the irregular pair, and I also saw that a group of friends on the group I am, they are also saying the same thing, and I would like to address that. So we can see a outer trend line here. This trend line that we drew, it is this trend line that we are expecting, and we are all waiting. The Ergon Trader stock channel, we are all expecting price to roll over to this point to give us a third touch, and then to pull back to the upside. Okay, that is what we are all expecting, and that is true. Okay, now I'm also saying on the group I said earlier, I see that there is an inner trend line, and I've studied this as well. I saw that there's an inner trend line at this point, okay, which I've just plotted. When I scale down to the forward time frame, you'll see it clearly. I saw an inner trend line at this point that the euro dollar is likely to respect and bounce off of it. Okay, this is true. However, I was saying something earlier about the principle of price action and the principle of chart patterns. When we scale down back to a daily time frame, you would see that now let us reason together with charts. Let us reason with this guy. Everybody call me. Let us reason with this guy. Let us reason with it. Now we would see, we all know that this line here, okay, when we scale down to the weekly time frame, we see that this line dates back. This is a line that has a strong head. Are we all seeing it? Okay. And let us get back to the daily time frame. If we are to be honest and to be realistic, with ourselves, everybody, we would know that, and we would all agree with me that now we are being responsive to the chart. We are not predicting. Remember. Now we would all agree with me that it is not really, how would I say this now? I would say that it won't make a lot of sense, okay, for price to come here, react off of it, and then it will come to this line, and then it will continue. Like, no, this is too early. This is too soon. It is too early. It is too soon. It is too early. It is too soon, because it cannot just roll over down to this inner trend line, and then it bounce off of it. Like, guys, there's a lot of space to the upside from 1.17549 to 1.23509. If I'm not mistaken, that is about 800 pips or so, and we are expecting price to just roll over to this point and then continue. Like, no, it won't be sense making. It won't make a lot of sense. It won't. So that's the reason why I concluded and I decided that this line will not it won't hold. It won't hold because the story will not be complete. Price makes a story. There's a story it is telling from the past to the present. We all know for a fact that it is a bullish momentum. However, it cannot just come to this line that is standing as a minor resistance and then just break above it for 2 days, retest it for how many days now? 3, 2, 4, 6, 8. Retest it for 8 days and then touch the line and then bounce the upside. No. To me, I believe and I am saying that this guy is going to roll over to the downside, come into this demand zone, gives us a double bottom, sit well, relax well into this green line, and then from there we have a push to the upside. This point where our first level target will be this line, our second level target will be this green line. Okay, so that is what I am. So I'm going to delete this line now. That is what I am saying, and that is what I will be saying to all of us. And the reason why we put this line here is because there is a demand zone. This line is a demand zone. Okay, it is a demand zone that dates back to the year February 2022. That's the reason why we are saying it is going to roll over to the downside and then have a continuation to this line first and to this line. So I'm going to do something so that our chart is going to look neat and fine. I'm going to delete this line now. I'm going to delete this line, and then I'm going to put a zone there. I'm going to put a zone. Alright. It doesn't have to be so thick. Okay. So that is plotted nicely. So we are all expecting price to roll over to this point. I'm going to delete this line as well. So all expecting price to roll over to this zone, and then from there, because I want my chart to look nice and clean, so I'm going to delete this red arrow as well. So I want price to roll over to this line, to this point, and then from there we're going to have a push to the upside. And I'm also seeing something that I would like to share with us, guys. Fibonacci is in play with what I just said. From this swing low, you're on a daily time frame, everybody. From this swing low to this swing high, you could see that it's this zone, this zone that you're expecting price to come back into. It aligns perfectly with the 50% retracement and 61.8% retracement. Okay, I'm going to delete this. So you're expecting price to roll over to this point, and then from there we're going to have a bullish momentum. First level target 1.7549, second level target 1.23509. remember, we are responsive. I'm not predicting the market here. Okay, I'm not predicting the market. I'm just responding to what the price, to what candlesticks, to what chart pattern is communicating to me. Alright, done and dusted with the euro-dollar pair. We're going to move down now to the US 30 pair. That is Dow Jones Industrial Average Index. I think that is a long name. Alright. In volume 4, this is volume 6, Ergon Trader stock. In volume 4 and volume 5, we analyzed the US 30 pair. If you want to understand in details, and if you don't want to get lost in the journey, you would have to go back to the previous trader talks and listen to it and understand what we were saying there. Okay, because like I said, I don't want to waste much of time because I have other pairs. There's other juicy pairs, guys. There's other juicy pairs that I want to explain to us, guys. So I don't want to waste our time explaining to us on these ones that we've smashed already. Okay, I'll just run through some few things before I continue. Alright, there's not much to say about this pair. Actually, there's not much. We know that this is an inverse head and shoulder pattern on this point. Right, it is the neckline. Okay, and this week, I think the last time we did a video on the US 30 was this point, where we saw a bullish engulfing candlestick, and then we were saying that everybody should be praying to their God that the US 30 should roll over to the downside and come back to this point, and then before we have a push against the upside. while I was studying, I come to understand something that is very, very interesting and very, very nice. Like it's freaking amazing. And what I come to understand is that I saw that truly work with everybody. Thank you, Ergon Trader Talks channel, for praying to your God. Though, thank you. The prayer really works. The prayer really worked. All of us were praying to God. We were praying to our God that we were praying that the US 30 is going to come down so that we would not lose the trade. Imagine bullish and engulfing candlestick, PM. Next week, bullish and engulfing candlestick, PM. And the first level target is this green light. Like, imagine, see you, everybody is so close. I believe that there are anointed men and there are anointed women on this planet. Thank you so much for praying. So that's just in a lighter mood. Let us be serious now. So we saw an inverse head and shoulder pattern where this is the left shoulder, this is the right shoulder, this is the head. So this is the neckline. When we scale down to a 2-day time frame, we would see what I'm saying there. Oh my God, I think my data connection my data connection is fine. Why is this thing acting like this? Hold on, guys, I don't know what is wrong with my data connection. Oh, I think it's back on. Apologies. Alright, this is my humble face. Don't worry. Very soon you'll be seeing my face as I'm recording. Alright, this is my humble face. That was my humble face earlier. Okay. So we were saying that we have an inverse head and shoulder pattern on these points: left shoulder, right shoulder, head. Okay, and then this is the neckline of this inverse head and shoulder pattern. We're expecting price to roll over to this line, and back then, before we were expecting price to roll over to this line, because the first analysis we did on US30 back then, in the first, that is volume 4, if I'm not mistaken, was when price was at this region. So we were expecting it to break above this region. That was why we put a black line here back then. We're expecting it to break above this region to give us a confirmation and then to roll over to the downside into this line before we continue. And the reason why we were expecting it to break above this region back then was because price was trending at a supply zone, then this line here. Okay, so we needed it to break above this supply zone to have a proper break of structure, and for it to come back into the neckline of the inverse head and shoulder pattern for us to have a continuation. So this was the point we were all expecting price to come back to back then. Alright, however, when I was doing my study, I come to understand something that is very, very interesting, and that is I saw that, I'm going to delete this, I saw that this zone, this black line, is a demand zone. Okay, is a demand zone. Actually, this is also a demand zone. Okay, this is also a demand zone. But if we are reasoning with the market now, you would see that the break of structure began from the right shoulder. Okay, it began from the right shoulder. It broke structure here, okay, to the upside. Now we are expecting it to roll over to this point. However, let us see these things together. If it roll over to this point, don't you think that it will be so close? Are you still with me? And however, I'm seeing something here. I'm seeing something like a double bottom inside of an inverse head and shoulder pattern. This is an inverse head and shoulder pattern. Left shoulder, right shoulder. This one and this one is considered as right shoulder. Then we have a head. However, I'm also seeing a double bottom inside inverse head and shoulder pattern. That gives me another confluence that the US30 truly is a bullish market. So we saw a break of structure happened here. Okay, we're expecting it to roll over to come back down into this region and break and continue its trend. However, when I was studying, I saw that there is a demand zone. This guy, when you get down to the weekly time frame, would see that this is a demand zone. This is also a demand zone. Okay. Now I would as I'm saying it, I feel like the US 30 is going to roll over, is going to choose this point, this demand zone, over this demand zone. Okay, over this demand zone. And the reason why I said that is because if we use a Fibonacci, we would see that from this swing low to this swing high, let us get on to daily time frame now. We would see that this line is aligning perfectly with the 50% retracement and the 61.8% retracement, and it is also aligning perfectly with the neckline of this double bottom. Okay, this is the neckline of the double bottom. So that means that this demand zone, this line here, is where the US 30 is going to be rolling back to, and then we're going to have a continuation to the upside. So here's what I'm expecting for the US 30 pair. I'm expecting something like this, and like this. Do you get me now? So this is what I'm expecting to see on the US 30 pair. I'm going to delete this and I'm going to make some adjustments to my chart. I'm going to delete this line as well, and I'm going to bring this bad boy to this point. Okay, I'm going to drag it here. Alright, I'm going to let it accommodate this point. Okay, so I'm expecting price to roll over to this point, and then you have a continuation. So I'm expecting the US 30 pair to roll over to this point like this, and like this. Okay, and you could see that Fibonacci as well is in play. From swing low to swing high is in play. I was saying that. So that's what I'm expecting for the US 30 pair. Alright, concerning we also have one more pair to explain before we move down to the major pairs that we want to talk about. Alright, I'm on to check the time. I think I've made a lot of time, so I've used a lot of time. Alright. I'm going to be talking about the GPP card as well. About the GPP card as well. Okay. The last time we analyzed GPP card, there's not much to say on GPP card. There's not much to say on GPP card. The last time we came and analyzed it, we saw that it was trending at the what's it called now, at the supply zone. So we're saying that we would be interested in it when it breaks the supply zone. However, it did not. You can see it now rolling back down and trading back down under the trend line resistance that dates back to 1998. Okay, so for now there's not much information on the JPP card. Now we are done and dusted with the pairs that we have been monitoring. So I have few pairs that I want to explain to us guys, and yes, actually there's one that is very, very active. That one is juicy. This one is very, very active. So that's going to be the first pair I'm going to be analyzing. It is the UK oil. The UK oil. This one is hot. So I'm going to be analyzing this one quick. Remember, I use 4 technical tools in analyzing my pairs. 1, I use the principle of price action and the principle of chart patterns. Secondly, I plot my support and resistance as major areas of rejections. Then thirdly, I use trend line to identify the current flow of the river. Then fourthly, I use Fibonacci as a confluence. Okay, so we have the UK oil here. This is 3 months time frame. So we're going to analyze it using our first principle, the principle of price action and chart patterns. So we saw that this is a low, this is a high, a higher low. We expected to have a higher high, however that did not happen, that failed to happen. We saw a low as well that is equal to the previous higher low. We saw a lower high, we saw a lower low, then we saw a high here that is lower than the previous high. Are we saying that? To me, this looks like a range. It looks like a range. It looks like a range. It looks like a range. A range. A range. That is what I can see. However, in the range, there is something that is happening pretty nicely. So for us to understand that, I'm going to move to the next phase of my analysis, and that is called plotting my support and resistance as major areas of rejections. So that's what I'm going to be doing right about now, and I'm going to be doing that quickly. I won't waste much time. If you want to learn how to plot support and resistance, I promise you guys that I will be doing a video for you guys on how to trade like me. I'm working on it. Pray for me, everybody. I need prayers. So that I'm going to come up with a video for you guys on how to learn how to trade like me, how to analyze the market like me, how to learn how to plot support and resistance, how to learn how to use trend line as a confluence, and how to learn how to use Fibonacci as well as a confluence. So without wasting our time, I'm going to plot my support and resistance now, very quickly and very fast. I'm going to start that. I'm going to go to a monthly time frame to do that. So I won't waste much of our time. There is something I'm seeing here as a resistance, major resistance. The major resistance. So I'm going to plot this nicely, and then I'm going to drag it. I'm going to clone it rather. There is something as well I'm seeing here. Let me just pick this support first before I start dealing with the middleman. So I'm going to clone this as well, and I'm going to drag it into the middlemans. Alright, there's also something here that is seated nicely. I don't think I'll be using this. I'd rather choose this. Okay. There's something here. Alright, so I'm going to be making use of lines and some points. So I don't want my charts to look messy. Okay. I think you're pretty much good. Yeah. I think you're pretty much good to go. So this is I've plotted my support and resistance. I said something earlier. I said that using the principle of price action, it is a freaking range, because I say that it's just up, down, up, down. Okay. Now that being said, there's something I'm seeing on the monthly time frame, and I would like to bring bring light to that, and that is I saw that I'm seeing something that is lining up pretty nicely, and I like to bring our knowledge to that. Now there's something we call the principle of candlesticks, and that is our candlesticks, our bullish engulfing candlesticks, bearish engulfing candlesticks, morning star, evening star, and many other candlesticks that we have out there. Now the monthly time frame, I could see that since the month of April 2025, we saw a bearish candlestick, we saw an indecision candlestick, we saw a bullish candlestick. This candlestick right about here, it is a morning star. Okay, it is a morning star that signifies a bullish momentum. All right, that means, see, listen to me everyone, Ergon Trader Talks, when you see a bullish candlesticks formation on a monthly time frame, do not joke with it. That guy is strong and that guy is going to happen. All right, don't joke with it. So we saw a morning star candlesticks on a monthly time frame, and that was when we begin to realize that, oh, it seems as if this guy has exhausted its selling opportunity, and it is about to pull to the upside. And another thing I was able to see is that if I could drag this a little bit to the back, I would see that I would see something here. Are we seeing this? And I think I'm going to be putting this here. I'm going to be putting this on page. I'm just going to drag this a bit to the upside, or to the furthest further. So we'll see that this is, I'm still plotting my support and resistance. And you can see a major area of rejection here, here, and here, even in the present. Okay, now in confluence with my with the morning star, that means that this guy has exhausted its selling opportunities and it is about to move to the upside. And so that when price got to this particular zone at a major area of support, it reacted off of it, and we could see it pulling up to the upside. And another thing I was able to see is that I'm going to be using trendline as well now to explain to us, to show us something that is very nice. Are we saying that? You could see that for the past 3 years or so, or 2 years, this trend line has held significantly. However, in this month, we have seen a break happened nicely. Okay, when we scale down to the weekly time frame, we'll see that clearly. Are we saying that? Are we saying that? We could see a break happen clearly, and we could see a retracement, a break to the upside, and a retracement. Okay, this is telling me, and this is telling all of us, that the UK oil is about to move to the upside. And another thing that is very convincing about this bias is that I use my Fibonacci from swing low to swing high, and I realized that price is currently trending at the 50 and 61.8% retracement. When we scale down to the monthly time frame, it will be more visible there. To be more visible there, I'm going to start from here. It's more visible there. As we can see it, you can see that price is trending at the 51% and 61% retracement. So I'm going to delete this. I'm going to come back to the weekly time frame, and like I said earlier, we could see a break of this trend line. Remember, I said I use trend line to identify the current flow of the river, and the current flow of the river is telling me that the downtrend has ended. It has broken over it, it has retested it, and then we are seeing another pull to the upside, and also on the weekly time frame I could see a chart pattern forming like so. I'm just going to adjust this to cater for this guy. We could see a chart pattern forming like so on the weekly time frame. We could see a left shoulder, we could see a right shoulder, we could see a head, and we could see a neckline. We could see, and this neckline is also in confluence with a major area of support that price just ran into and respected it. We could see a breakout of this inverse head and shoulder pattern. We could see a retracement, and then we could see a pull to the upside. Or you come down to the daily time frame. Now we're about to take advantage of this juicy trade. We come down to the daily time frame, we could see what we have been seeing since, still forming nicely and still in play. The inverse head and shoulder pattern held nicely, left shoulder, right shoulder, head, neckline broken, retested, and we could see a continuation. Now this is how we're going to take advantage of this trade, everybody. This is how we take advantage of this trade. When we scale down to the 4-hour time frame, I want to say something on the daily time frame. Last week we could see that price closed at a bullish engulfing candle close. Okay, that means it is telling me that, yo Ergon, I'm ready to move to the upside. All you have to do is to pull the trigger. However, before we pull the trigger, you could see that price is still trending, is still trading at a mini supply zone right about here. So here's what I'm going to do, guys. I'm going to wait for a bullish candle close to close above this line, let's say somewhere around this region, and then I'm going to be pulling my trigger to open for a buy. And my first level target, as you all know, is this point, the nearest eye. The second level target is going to be this point. That will be here. So this is my bias concerning the UK oil. So everybody, next week Monday, prepare your guards, prepare your armors, your shield, and everything. The UK oil is rallying to the upside. We have a buy bias, and we are not predicting the market. We are responsive to the market, and as I have explained, we've seen that everything I said is true and is in confluence with the UK oil for it to have a buy. So we're expecting want to see a bullish engulfing candle close above this region, and then we open for a buy into this green line first from 70.62 knots to 78.735. I think that is about 800 pips or so. 80 pips. I think that's 80 pips. That's something as well. It is something that we could work with. But the overall is 82 pips. I think that is 120 pips. So 120 pips is also a nice something that we could all take advantage of. So that's about the UK oil, and I have other pairs that I want to explain, but I don't want to waste our time. So that is going to be the other juicy pair that I have for you guys. Is going to be put on hold for the next video. Anticipate and monitoring some pairs. I'm monitoring the USDCHF. I am monitoring the GBP USD. I'm monitoring the BTC. So, but for now, I'm just going to give you the UK oil as an immediate trading opportunity that we can all take advantage of. Yeah, and that is pretty much volume 6 of Ergon Trader Talks. Stay blessed and peace out.